quick pop quiz before we kick into self-employment income. Just a quick pop quiz. I'm going to give you a couple variables. You tell me what the qualified monthly income is. Okay. Full time. That's all I'm going to say. Full time. Hourly rate is $61. Okay. What is the qualified monthly income? $61 per hour, full time. Full time is the key word, guys, okay? If you have it, just yell it out. Not C, not Peter.
I want to say 10,573.
Very good. Anyone else get that number? Yeah, Hyuna? Yeah, you nodded, Jared. Good, awesome, great, good job. So today, so it really is that simple, right, guys? Full time, just always remember 2080. Now, if they say they're part time, obviously you're gonna have to adjust the income, but and they also get a 2-year average for part time. So always footnote that if they are part time workers, the guidelines do require a 2-year, okay, seasoned to qualify, okay, seasonality to qualify, okay. There are some exceptions to it, but we won't go down that road. When it comes to self-employed borrowers, right? This self-employed borrowers, we're not talking non-QM, okay. We're strictly talking conventional and jumbo as we know it, like conventional jumbo. When a borrower is self-employed, it will always, okay, entail tax returns. Okay, so no longer are you really looking at W-2s or pay stubs. You're going to look at their business tax returns or their 1040 tax returns. There are basically, I would say, 4 different types of self-employment tax returns that you can get entity-wise. Are you guys all familiar with these different tax returns? Does the tax forms 1040, 1120, 1120S, 1065 all ring a bell to you? On? Yeah? Hyuna? Yes or no? Maybe? Not yet? Okay. So right. Primarily as loan officers, I would say about 95, 99% of the times when someone says they're self-employed, you're going to be dealing with either a corporation, which is in the form of a C Corp 1120, an S Corp, which is an 1120S, a partnership, a 1065, or Schedule C of your 1040 individual tax returns. If those are all confusing, you're going to get used to it because you're going to see the same ones over and over and over again. But it's really those 4, right? 1120, 1120S, 1065, which is a partnership or an LLC sometimes, and then your Schedule C, a sole proprietor on your 1040s. Okay, so a borrower comes to you, hey, can I see how much I qualify? Obviously, number one thing you need to know is what their income is. Hey, by the way, I am self-employed. Your question then is going to be, can I see your tax returns? For those, when you're on a call and consulting someone, a borrower, and they say, hey, I'm a wage earner, I make $62 an hour, it's very easy for you to calculate that income or at least get within that ballpark. When you're talking to someone who is self-employed and they say, oh, and then you ask, let's just say you ask, and it's a reasonable question, how much do you make? And whatever their response is, I can tell you right now, it almost doesn't matter. Okay? It almost does not matter. Okay? So real quickly, C is my borrower, and I go, hey, C, how are you employed? Are you wage earner? Are you salaried, or do you have your own business? And C says, I'm self-employed. And I go, hey, how much do you make a year? He says what?
150,000.
150,000, right? To you as a loan officer, it means nothing. Okay? Because it can mean 150,000. You could ask the question, well, is that net? Or you could ask, is that gross? But even then, you're not going to get anywhere with it. Why? Because one, they don't know what they're actually really reporting on their tax returns. Okay, they don't really know if that's their net or gross many times. Number two, you don't know how that CPA or tax preparer is deducting from that $150,000 number. And we're going to get into that right now. So I'm going to bring up a couple or a few examples. Okay, so I'm going to share my screen and bring up a few examples. The first two are going to be very, very simple. Okay, so this is before I show you I will show you my screen real shortly. Okay, so this is a LLC as a well, it's an S corporation, and we're going to go over this too as on the tax returns, but here we are. Okay. So this is a copy of a 1120S. So this is a corporation, and it's an S corp as indicated by the S. Okay. If it's a C corp, the S will be omitted. It won't be there. Okay. So this is an S corp. Now, do you guys know what the main difference between an S corp and a C corp is?
Flow through.
Correct. Exactly. So on an S corp, really the main difference, and I'm not an accountant or a CPA, or no longer. With a C corp or S corp, you get what's called a K1 schedule. Okay, and what this K1 schedule is exactly what On said. It's from the corporation that income flows through a partner or a shareholder right here. Okay. In this case, Sylvia Gutierrez is 100% shareholder of this S corporation. Okay. So you will see now this income, ordinary business income or loss, this negative 17,000 flow to her from this corporation loss right here, the 17,000. Does that make sense? Right? So this is your corporation tax return, and this corporation shows a negative $17,000 net ordinary business income. Okay, the $17,000 negative. Because this is an S corporation, this is going to flow through to the borrower's individual name right here. Okay, again, this is 100%. 100% of it flowed through her, and this 100% owner is going to claim it on her individual tax return. So I'm going to show you that real quick. So if I bring up her individual tax return, voila. Other income from Schedule 1, you see the negative $17,000 there, right? Pretty neat, okay? So now in a C Corp, okay, which I think I'll get to later, in a C Corp, there is no K1 schedule. Okay, in a C Corp, there is no K1, so it does not flow through to the borrower. Okay, that is the main difference. Okay, now we are going to now calculate this corporation's income. Okay, and it's actually a lot more simpler than you think. Now, this one's a simple scenario.